I hope everybody can see my screen. So, welcome everyone. Today's session is on H1B and real estate. It looks little blurry. I'll make sure I correct it next time. So, today's topic is H1B real estate, how to buy smart and not to be scared. Before that, let me introduce myself. I'm Prakash Singh. I live in state of Minnesota. I have a real estate and mortgage license, and I have been working in real estate for more than a decade now, and I love what I do. So in this session, I want to make sure that everyone who is watching me, they should get some knowledge out of this conversation, and they should feel a little bit empowered. They should not be scared of buying and investing into real estate after this session. And I will make sure that I boost your confidence at the end of this call. You should feel like you learned something. So let's go to H1B real estate myth and reality. So the main question that I see around all people, all immigrants, is should you wait or buy now? In real estate, everyone who waited, they lost money. That's the history. If you had an opportunity to buy a house in 2010 and you thought, okay, I'll buy it in 2014, and you might have regretted it. You had an opportunity to buy in 2016 and you thought, okay, I'll buy in 2019. You might have again regretted it. So anytime you had an opportunity in 2020, then you missed it. You had an opportunity in 2023, you missed it. Now also you have opportunity to buy because of all the things going on in the world. Its prices are not so high. People are negotiating, so it's the right time to buy. Any time is right time to buy. That's what I would say. Just give it few years, and you should be good. You will have profit. Most H1B buyers delay due to fear, but data tells a different story because most of the investors are also H1B holders. So while a lot of H1B people, they are scared of investing in real estate or buying real estate, most of my clients with the most number of properties are also on H1B. So you have to decide which side you want to stand. Next is the biggest fear in with H1B candidates. Whenever I'm saying H1B, basically I'm considering all immigrants, whether you are an H1, L1, J1, whichever visa you are on. I'm just calling H1B because that's very close to my heart, and a lot of people from my background from India, they come on H1, and H1B has become a very famous word for immigrants. So what is the biggest fear among all the immigrants? That's the question. And some of the fears that I have seen in my career is, what if I lose my job? What if I leave the country, the US? How will I find tenants? Is it hard to manage? What if tenants are bad? And who handle repairs? What if my bathroom starts leaking? What if my appliances break? Those kind of things. Who do I trust remotely? So if I'm in a different state or I'm living in India, can I even trust someone here who can fix all the issues for me? So these are mostly the questions that people has. So with this, let me try to help you out. Let's do some reality check. So home ownership is not a permanent commitment. Once you are a homeowner, that doesn't mean that you are stuck to the house. You can rent it, you can sell it, you can refinance it, take care of your debts, or you can convert it into investment. It's your decision what you want to do with the house, but it doesn't mean that once you become an owner, you are going to be a lifetime owner. I hope everybody is clear about it, right? Next is renting versus ownership. If you consider the data, it's a median data that I have collected based on the information I had. So if you compare the data for 5 years, the rent paid, basically the money that you lose is around, on an average, $120,000. And that's the scenario in Minnesota. or most of the states, I would say. So in 5 years, you lose $120,000. If you would have invested it somewhere else or on yourself, you could have gained a lot more than that. So we will cover it. Let me go to the next one. And I have a question from Ashish. Okay. And the question is, even in real estate, we have to pay interest. Okay. I will come to that because a portion goes to your principal, and then there is a big portion that goes to your interest. Then you get your tax benefit on interest, and at the same time you are building equity. Your house is growing 5 times, if not 20 times, more than what you would have invested in a stock. I will explain you how. Because to buy a $200,000 house, you need only uh, 20%, or you need only 5% to buy a house, even less than 5. There are some programs where you need to buy only less than 5%. So for a $200,000 house, you can buy it with $10,000 in hand. And suppose if $200,000 house appreciates by 5% every year, so it's going to be $210,000. And what you paid is only $10,000. So you got $10,000 back after investing $10,000 in real estate. So people don't understand that. They compare this with stock, where you have to spend $200,000 to get $210,000. So there is a difference. And we can have a detailed conversation if you call me. Okay. So what your payment does in real estate, and this is the answer to Ashish's question that he just asked. You get equity, you get appreciation, you get tax benefit, right? And in rent, what do you get? You get zero. Because most of the people who are immigrants, who are H1, who are here on H1, they don't qualify for any kind of rent subsidies, or most of them don't qualify for any kind of like a tax benefit for their rental amount, right? So you just lose money. Let's look at the next slide. So let's talk about market growth example. So suppose your house is appreciating at 5%, and I have taken an example of $300,000. So in year one, it's going to be around $315,000, right? In year two, it will be another, consider $15,000 or $16,000. So in year five, see, it's close to $400,000. By the time, if you are renting, and most of the H1B people, they live in the country for 5 years or more. I've seen like very few people going back sooner than that. So if you live in an apartment for 5 years, you have paid $120,000 where you did not even get any tax benefit. But if you had your own property, you have gained $100,000 in equity on top of what you have paid towards your principal, right? So you are gaining a big, at least $130,000 here, rather than losing $120,000 while renting a house. Now, down payment reality. A lot of people are scared about down payment. So 5% is common for a first-time home buyer coming from a different country. I would recommend go for a 5% down, although 20% is what everyone prefers. But 5% down, you can buy a house. You will have to pay PMI, and that PMI is the mortgage insurance part, and that can be anywhere from $40 to $150, $160 range, depending on your credit, depending on how much down you put. A lot of factors are involved, but that's where it is. But it gives you flexibility to put only 5% down, and then you can get it removed when you have 20% equity in your house. That means if you would have paid 20% principal in your house, then you can get your PMI removed, or automatically when your loan to value is 78%, then also it gets removed. So that we can talk about it. But The scenario what I'm trying to cover here is you don't need a lot of money to buy a house. You just need 5%. For a small two-bedroom townhome or around $200,000, you need $10,000 to buy a property. Okay, let me give you an example of how it works. So suppose you have a $400,000 property and you are buying it at 5.75% interest rate for 30 years. So if you want to put 5% down, you need to put $20,000. There will be a higher payment and there will be PMI. But when you put 20% down, you have to put down $80,000. Your payment will be lower because obviously now you are taking a loan of $320,000. When you put only 5% down, then you take a loan of $380,000. But there is a PMI component that is also removed when you put 20% down. But you have to remember you are putting $80,000. And I would say if you don't have $80,000, waiting for $80,000 means you will be losing more money. So it's better to put 5% and use PMI and buy a property. That's just an advice. Now, the difference in payment would be somewhere around $300 to $500. So a lot of people, they wait till they get 20% down, and what they are saving is $300 to $500 a month. But at the same time, now they will be living in an apartment for longer time and they will be paying $2,000 a month. So it's a big give for a very little take. So in this deal, you can do your own math and you can see which strategy is good for you. And let me know if you have any question. I am there to help. Okay. So the next topic that I wanted to cover is investment property strategy. A lot of people on H1B, they are scared of investing in real estate. They feel like it's too much to manage. There are some scenarios that I'll be covering later. So let's see how the investment works. You buy a property, you rent it out, and you get the income. It's as simple as that. It's everywhere in the world. It's the same strategy. Now, over the time, you build a portfolio. You buy one condo, you buy another townhome, you buy one single family, you buy a multifamily, maybe you invest in apartments. So slowly in 10 to 15 years, you see that you have a whole portfolio under your belt. And then after that, you leverage your appreciation. You can take the equity out of your house or you can increase your rent, and that will pay for itself. At the same time, it will give you enough money for your other expenses. So this is how this whole investment property works. Now, the biggest challenge, relocation for H1B people, because they are always in this threat that they will get a better job or they may have to go back or they may get transferred, right? So if you move, you are living in your primary home, and if you move, you can always convert it into a rental. There are a couple of things that you need to consider. If you are in a single family house, then there is no issue, at least no issue in Minnesota. But if you are living in a house which is under an association, or if you are living in a condo community, then you have to look for your homeowners association rules, if they allow any rentals or not, if there is any cap on top of your rental count or not. So you have to consider all those. So normally when people plan to purchase, I ask them about their risk appetite, and if they think they will be moving very soon, so I recommend them to buy a property that can be rented once they move. So that way they don't have to sell the property. But you can always sell a property. There is no issues. It's only renting where some kind of issues comes up if you are in an association who does not allow you to rent. Okay. In that case, I always say that single family home has more flexibility. But if it is a starter home and you can't afford a single family, then there are so many townhomes that are easy to buy and easy to rent. Okay. Now, if you are not in a state, in the same state, like suppose you are from Minnesota and you had to move out of Minnesota, or you had to move back to India, so how will you manage your property, right? And even if you are living in Minnesota, you have a big portfolio, you don't want to manage yourself. So how does the property management works? So typically, a property manager costs around $100 on a single family or a townhome here in Minnesota. That's a typical price. If you have a bigger, very very big house, or if you have a multi-family, then it could be around $200 or $100 per door. That's what they charge. So just to give you an idea, from your rent, this much money will be deducted. They handle tenants, rents, repairs, or you can use them for uh, they can get all the repairs done. Means will have people, they will call them, they will get money from you, obviously, but they will take care of all the repairs. Or if you don't want to use them, there are what few people do is they take home warranty, like AHS or choice home warranty. So how this warranty works is they charge you for the year, or some of them have monthly payment options too, and they have a copay. So a deductible, you can call it. So anytime, suppose your fridge goes bad, your refrigerator is not working. So in that case, you call that company, they will send their own approved repairman. That repairman will go and look at your refrigerator, they will fix it, and they will charge you $100 or $125 based on what kind of plan you have taken. And if they had to repair the refrigerator, they will replace it. Okay. So this is how warranty works. And that's a good option if you want to manage by yourself. And you always be in touch with your local real estate professional, like me. If you are my client, you always be in touch with me. If you have any problem, anybody you want somebody to go and look at the property, you can always call your connection. Like my clients, they live out of state and they always call me, and I go and look at their property. So this is how you can manage. It's not a big deal. Like initially, first few months, you may have some challenges, but how many times a faucet breaks? Tell me, like once in 2 years, 3 years. So we have so many ways of managing those kind of situations. Your refrigerator will not break every month, right? Or your dishwasher will also not go bad every month. So don't let these things sit on your head and not let you proceed. So it's always easy to be in touch with people like me. And if you have any question, you can ask us to answer any question. We are not going to charge you. Or you can always have a property manager who will cost very little money, but they will take all the headache out of your head, basically. So with this, I think we have a question. So the question is, will property manager always be available if there is any issue? Okay. Yeah. So here is the thing. You sign the lease, and if you have a good property manager, you are not even going to talk to tenant ever. Property manager will talk to the tenant. It's the property manager's phone number, which will be with the tenant. Any kind of repair, any kind of issues, property manager will be talking to the tenants. So you don't have to worry about it. You have to talk to property manager. Like suppose he got some plumber and it cost $2,000. So you talk to property manager, pay him the money, or maybe try to negotiate or ask him to find somebody else. But you are not going to talk to any repairman, or you are not going to talk to any kind of like this guy, any tenants. Or even if there is city inspection, property manager goes there for inspection. I hope I answered that question. Now, out of country. So, in short, whether you are out of state or out of country, this whole process works the same. You still own your property. Your manager handles everything. You set approval limits for repairs, and your passive ownership is possible. Whether you are living in the US and have a property back in Bangalore, or whether you are living in Bangalore and you have a property here in US, it's the same thing. I would say it's easier to manage a property in Minnesota while you are living in India, rather than it's managing a property in India when you are living in Minnesota. So it's very easy. Our system is all set. You just need to call your property manager. They will take care of the property. If there is any issue, you just pre-approve some amount to your property manager. They will take care of the repairs. And if there is extra charge, you just send the money, and your house is taken care. So that's how simple it is. Now, the next topic I wanted to cover is rental income and legal. So, one thing that you have to make sure, no matter where you live, is all your income is going to your US account, and you have to report your taxes, whether you are living here, abroad, wherever, but you have a property and you have a rental income coming here in United States. You have to report. You can own and rent, obviously, but you cannot pay yourself for management. If you are an H1B, you cannot like become a property manager yourself and start paying $100, $200 to yourself, because you cannot make that money. You have to have a property manager if you are using, or you can just manage yourself, but you cannot be an official property manager, right? Um, you need to hire licensed professionals. So obviously, if you are investing $200,000 in a house, hiring licensed professionals is always a good idea. If you have any question, what kind of licensed professional, call me. I will let you know what I mean by licensed professionals, whether it's licensed contractor, licensed plumber, or wherever you have guys. So don't take shortcuts, I would say. Have a good warranty company, or have a good property manager, or have nice connection with people like me who can guide you through the process. Thank you. Let's go to the next one. Property manager role. So I was ignoring a couple of more questions from Karthik and Sunil, and I think this is the slide where you will get your questions answered. Is what is the role of property manager? How does it work? So what happens is you meet a property manager. Suppose I am your property manager. You meet with me, and we will have a contract. So the contract typically would be, I will find you a tenant. I will charge you 1 month's rent when I find you a tenant. And then after that, I'll be charging you $100 a month for the whole year. Contract is for 12 months, and I'll make sure I take care of the repairs. You have to pay for it, but I'll take care of the repairs. I will get the rent. I will send the rent to your account. And if there is any kind of question from tenants, or any kind of inspection needed by city, I will be there. I will make sure all those things are taken care. So the work starts with tenant screening. So as a property manager, I'm not a property manager here, but I'm just playing this role. So as a property manager, I'm going to screen all the tenants. I will place the ad, and then when somebody applies, I'll be screening. I'll get to you. I'll let you know which one is good, which one is bad, based on your comfort. We will, and if someone really passes all the criteria, then we kind of go with the contract. And then once the tenant is placed, then we collect the rent. And once rent is collected, normally rent comes to property management's account, and then it's transferred to owner's account. After that, if there is any maintenance is needed, then property manager does the maintenance coordination. He calls all the local plumbers, electricians, whoever is needed. They come and do the work. Property manager pays them. They get money from the seller. And at the end, compliance, if there is any kind of compliance issues with city, if there is any inspection questions, then property manager will respond to those questions. So you don't have to worry about it. Now let's talk about some real cash flow example. So suppose your rent is $2,200 for your property, and your mortgage payment, your taxes, your insurance, and your maintenance. And on top of that, there is another item which is HOA, like your homeowner association bills. If all these comes to around $1,800, then you are making $400 a month profit. After that, what you do with that 400 is is your decision. You can put that back in your principal, you can keep that in your bank, no matter what you want, that's your decision. But this is how the cash flow is calculated. So your cash flow is your total rent minus all your expenses. And you can include maybe in maintenance, you can include some warranty cost, like we talked about. If you are taking a warranty service, that will be $50, $60 sometimes. Okay. Okay, we have another question from Shubodh. Okay, so the question is, what happens? Huh. Okay, what if something breaks? Okay, so obviously, if you are investing in $200,000 and something of worth $1,000 breaks, so that's part of the investment, that's part of the business. But that's why I was telling you about the warranty service, where they will replace things. There are so many different companies, they provide these kind of services where they take a monthly fee, and if some big item breaks in your house, they replace it. Or there are ways like, depending on what kind of rental you have, there are some shops like Scratch and Dent, where they have very minor dent, but they sell appliances for half the price. So you can go to those places, buy some nice looking appliance, and replace it in your rental. Okay, so there are so many different ways of doing it. Let's go to the next one. So risk versus reward. So obviously, if you are doing a business, if you are making money, there will be some risk and there will be some rewards. So your risk is your vacancy and your repairs, like the question that came up from Subodh just now. So vacancy is normally when a tenant moves out, and you find another tenant. So you may have to do some repairs that may take few days, and you cannot just immediately place another tenant. So there will be a gap. There could be a gap of 2 weeks. There could be a gap of 1 month. So that month you will have to pay your mortgage. But now consider it as your investment. You are investing in your own property. You are paying mortgage of your own property, which is appreciating over time. So that is sometimes may cost you $2,000 to $5,000 a year. But at the same time, it's giving you a good appreciation. So you have to look at it as a whole overall portfolio. Now, the second part is reward. So your house is appreciating, your equity is building in your house, and you are getting a good income from your property. So that's your reward. If you consider your risk versus reward scenario for a long term, wealth wins. So there are hardly anyone I have seen who has lost money in real estate, but mostly in long term, if you hold your property, you will have good wealth, and you will have very good appreciation. So real estate is always a very good investment. Let's go to the biggest mistake from H1B people. It's mostly about the people who are immigrants, H1, L1, J1, B1, P1, whichever visa you are on. So the biggest mistake that people who immigrate from different country, what they do is they wait too long and then they regret it. They overthink about their visa, that I'm here on visa, I may go anytime. And then after a few years, they regret it. They have fear of repairs. If I buy a property, I'll have to spend a lot of money in repairs. Then again, that's one of the biggest mistake. Repairs don't cost that much. Houses in US are built so nice. Any part can be replaced, any part can be repaired, and it doesn't cost you a fortune. And even if it does, it's your own property. It will appreciate the value over time anyway. And then finally, this is the biggest regret of anybody, not only in real estate, anywhere in the world, is not taking action. If you don't take action, after a few years, you regret. You just think, why didn't I do it 5 years back? So the best time is now. Whenever you are planning, if you have even a little bit of doubt in your mind, or even if you have a little bit of enthusiasm about real estate or investing in real estate, it's better to jump in now. And right now, when there is a war situation and tariff situation going on, this is the perfect time to purchase a property. because you can easily negotiate the price. So never think it's too late. You can always invest in real estate, and it will give you very good return. Now, what's the smart strategy? So, depending on all the risks and the fear that immigrants have, um, I would say the smart strategy is you start small. That's why I've been giving you example of $200,000 townhome, because that's a two-bedroom townhome, two-bath townhome in a good school district that you call it like a nice neighborhood, and um, you don't have to buy fancy $500,000, $600,000 condo, and then buy in a known area, the area which you know, where you can easily connect to the highway, or if you, it should have a very good connectivity with your job, or if you travel, then it should be connected to airport, that kind of area. Don't go somewhere you have never been before, and think about long term. Like you're buying a property, you're going to hold it. Don't think that I'm buying in April and I'll be selling it in September. No, no. If you are thinking like that, then don't buy the property. And work with some trusted advisor. When you are working with any loan officer, any realtor, any kind of repairman, property manager, you need to trust them. If you have any doubt in your mind that this guy is taking your advantage, then just run away. You need to trust them. Even if their advice you don't like, if you have trust, just trust them and proceed with what they are saying, because they also want to do business and they want to keep good care of you. So if you are comfortable, just listen to whatever they say. If you are not at all comfortable, then run away. Pretty much that's what I have to say. Now, everything that I said in last around 30 minutes, why this matters. So if you buy early, you finish your loan early, and that's a universal concept, right? Not only in loan, everywhere else. You start early, early bird catches the worm. That's what we say, right? Now your kid's future is secured. If you buy a townhome or a property when your kid is 1 year old or 2 year old, by the time he or she goes to college, you will have enough equity to pay for their college. If you can afford buy a townhome and rent it out when they are still little, by the time they go to college, either they live in that property with their friends and make some money out of the shared rent, or a rent will pay for their monthly expenses, or they can just take the equity out and pay for their college. There are so many different strategies if you invest in real estate. And time in market beats timing. So if you're waiting for a better time, that 2026 is going to be not a good time for me, 2027 is a better time for me, then that doesn't work that way. Your time in market definitely beats your timing. People, whoever invested early, they are in much better position than people who have not invested yet. But it doesn't mean that you missed the boat. You can still make money. It's never too late in real estate. Let's go to my final thought. So every year you wait, no matter you are on visa, you are not on visa, no matter what you are planning to do, every year you wait, you lose opportunity. Somebody else is going to grab that opportunity. And all buyers eventually regret waiting. Even if you would have bought in your 20s, you regret, why didn't I buy when I was 18 or 19 years old? If you bought in 40s, you regret, why didn't I buy when I was in my 20s? So everybody regrets. So just take action so you regret less. That's what I would say. If you have a little bit of idea of real estate, and if you think about it even for a second in a day that yes, I should be buying or investing, then jump on it. Don't wait for a nice opportunity, because that never comes. Like, it's always good opportunity in real estate. Like, it's always a good time to buy. That's what we call it. And that's a proven fact. Okay. With this, I would say thank you so much for listening to me. I can see 3 or 4 questions which are very broader topic, and I will get back to you, Snehal, Srinivas, and Atul. I will get back to all you guys with the answers, because these are very big topics. I'm going to cover more topics in our next webinar sessions. But as of right now, let me thank all of you for joining this webinar. Uh, you can call me anytime. You can send me a text 24/7. You ask me freely. There is no pressure. You can ask me any question you have in your mind. I know sometimes it's difficult to talk about some of the scenarios, but you can call me anytime. You can book consultation, send me a message. I'm available most of the day. We can meet for 30 minutes over Zoom. I will try to answer any of your questions. And then you can make an informed decision based on the problems or the issues that you have, and everybody is different. So we will talk about your situation, and I will provide you enough input so you can make an informed decision yourself. With this, I would say thank you so much for joining, and I will talk to you in next webinar. Thank you. Bye.